Welcome to Stephen Johnson's Stocks. We've been on a long road together, and thank you guys all for following. Really, milestone month kind of hasn't hit home. Really, it's hard to digest that I have the ability, or I possess the ability to turn $1,000 into more than $10,000 in a single month, creating the first five-figure $10,000 profit month. That's net. It's just a little bit under that if you take off borrow fees, but I'll go through it in the video. For me, I just want to kind of serve you guys. So I'm trying to think of the most commonly asked questions that I'll get. How did I do it? I think there's 3 or 4 answers. I've been part of the Tim Sykes challenge. I've learned from all the best guys there, and I'm in the room to see what they're doing. And over the years, I've obviously learned to emulate them. So, I mean, I know the challenge can cost several $1,000s, but I can tell you I made more than that this month already than what the challenge cost. And I'll continue to make many more for the next months and 10, 20, 30 years as long as I'm alive. Second, there's a guy called Sam Daghash who's like a quantum NLP coach and very different to a life coach, and he's really helped my psychology, again, not for very much money, but he's really helped me psychology, so I'm in a very good state with trading. And I had a real problem with getting my account from $500 to 5K, and I just blew it every time. And I formed a limiting belief that I couldn't get over that. I wasn't worthy of it. And we worked together, and I give him a lot of credit for smashing this 10K month. And finally, I track data like hell. I track short setups, long setups. I track where to enter, how much to gap up, how much they broke out, when they did break out, how much did the breakout long go up over, how much did it retrace, how many breakouts are successful. On the short side, how much the stocks gap up, stocks that gap up on certain volume and float, how much did it spike before the fall. I don't give that away for free because I don't want to give data that I've spent 4 or 5 years collecting and all the hard work I've put in. But I sell that for $50. The link is in the description below if anyone wants to check that out. That's basically how I learned how to trade and form my own patterns and entries and exits to be a profitable trader. And obviously that hard work has helped us make $10,000 this month from $1,000. So not much else to say. I'm humbled. I've grown. There's some amazing lessons in this video. It's not the most fun and sexy, but it's the best free education I think is available anywhere. And I know I'm humbled and I'm not that great, but the lessons that I've learned this month personally for me, and it's my lessons, so I'm biased, I think they're the best lessons I've ever learned this month. So check it out. What's up, guys? Welcome to the April review. I basically turned $1,000 into over $10,000 this month. Just withdrew 5.7K to start again, turning 5K into 10K. The net profit loss is pretty solid month on month. This is January, February, March, April. I was a bit shaky in March thinking, oh my God, if I can only have a 10K a year and I was up 8K, I can maybe think about trading for a living. And then I had this month, I thought the dream was over before kind of really smashing it out the park with a 10.3K month, 17.2K year. To be totally transparent with you guys, the average borrow cost I've paid, because net profit doesn't include borrow costs, is around 12%. It was around 15 because I paid a huge borrow on SAEX this month. But so that's 17.2K a year is actually more. I've made more like 15K on the year, which is about £12,000-ish, which is already the income of maybe a low-level worker, admin assistant, admin marketing, low-level retail, supermarkets. I'm pretty much earning that salary already, and it's only 4 months into the year. I'm earning that year's salary, so not that I'm not looking down or up or in any way on anyone. I'm trying to work out if I can trade for a living, and if so, how I would need to live. In terms of the profits on the month, by week. It's hitting regular kind of 2K weeks. Had a 3K week. Had a nice 2.5K day. Really proud. No losses above 1,000. Although sadly, on the very last day of the month, I took my biggest loss, which there's a huge lesson for, which is the lesson of the month for this month. Was a lesson for last month, which I didn't break, so I'm proud of. We'll re-go over that. And in terms of winning days to losing days, there's pretty much 3 green days to every red. And I win double what I ever lose in terms of average wins to losses. I really, really, really try and take key lessons away from every month trading. I mean, I'm in a very fortunate position where I'm now being paid to learn how to trade the market because I can trade profitably and I'm learning so much every day. But I need to, the lessons that I do learn every month from trading are really, there's not as many as there was. So the ones that I learned to perfect my craft and game, I really need to remember and pay attention to because it's not like, oh my God, I don't know what I'm doing. This kind of works, that kind of works. Like I know how to trade obviously really well now. I mean, my account, I grew 1,000% this month, but not small numbers, like 1K to over 10. So it's really about key lessons. So I want to recap first on the lesson from March. And the lesson from March was CTRM. It's standard spikes and fails, gaps and fails all the time. And the chart was so bad I knew it was a short. But when the volume, this is a 15-minute candle, when it pops up out of nowhere, when any stock pops up out of nowhere, and it's got a range like this, or it's got a gap in range like this, or like this is not small. This is 3 to 96. So when a stock with that range pops, as a general rule, I will just never look to short anything that pops up at 9.15, 9.20, 9.25. That was the lesson of March. Just don't, anything with kind of range that just pops up, or even anything that just pops up, I don't short anymore. I just will not do it. And I stuck to that lesson in April and I'm proud. The other lesson is with UAEVS, it was, I mean, it's a nice breakout. This is my biggest loss this month. And it's obviously a good breakout. And to be honest, it's not the setup that I usually play. Normally, you get an overextended gap down. Well, let's look at this. I mean, I initially wanted to play this as an overextended gap down. So it ripped from the 70s to the 2s. I wanted it to open in the 250s, fail off resistance in the 270s and come back down. So this 250 mark is quite important. Is that the 250s? No, it's the 4s. Let's put the 250s in. One second. I'm going to have to go back in the chart because it's too high. Yeah, so he has the 250, 260 level. So I was expecting, if we go back, it's going to top, no, so it's like the 280s is basically the level. So let's just move this up, yeah. So you could see it popped up, broke through, but came back down, fell through. So now it's looking like on this level, on this 280 level, it's kind of at the resistance. So when it dropped here below the previous day high of yesterday, which, let's have a quick look at it. So we can see it on intraday as well. So here's the previous day high. When it fails that high, so I was shorting it around here, but my risk was off the high of the day pre-market, 340, which was just I don't mind that risk. I mean, maybe I should have played the risk off the previous day high, but I mean, I don't mind. I think as long as it doesn't make a new high of day to day in the 340s, it's fine. So I took a small position in the 274s-ish. It immediately washed out to the 240s. I was like, yes. And then I added into this bounce with more size, being a bit aggressive, thinking, right, let's go for this. And the mistake that I made is I didn't cut it when it broke. I got in my head somehow that this stock was doomed, but what I didn't realize was it's actually broke this kind of key level on the daily, and levels on the daily are more important than levels intraday, honestly. And I basically broke the plan. So there's two plans you can play. You can either short it off the 340s, play it very carefully at its starter, 150, 200 shares, whatever, and add with a plan to have full size around 320. And when it breaks 320, get out. Your other plan can be short against the 280s on the previous day level. When it breaks the 280s, which was my new plan when I started adding size on this crack, I should have been out, and honestly, I would have made a small gain had I got out in the 290s. For whatever reason, and it's on live stream, I don't know why, I had it in my head that it wouldn't fail when it had broke this key level. I just misread the chart, maybe got a bit too cocky, I don't know. Thinking I knew what I was doing, I just misunderstood something. And the main lesson of this month, yeah, there's a few when I go back to this. I mean, when it breaks the key level, I need to be more aware of daily support levels. But the most important lesson that I've found myself stuck in a few times is whenever it trades more than 1 million, if it trades even 1 million in the opening candle, you're probably going to be fighting the stock long and you need to get out. Because I was basically holding and hoping up here, thinking, no, I took half size off in the 350s and I shorted into the 390s. Here, I was break even on the day in the 340s. Here, I was down about 400-ish, but it's still not a terrible day. And then when it broke through, I had to cut it I cut it basically 435. As soon as the 4 level, the breakout held, I cut it. You can obviously hold and hope, and I had some bad news or something here, and it's down in the ones. If I'd shorted all the way, it would have been my best day ever of 3,000 or 4,000, but you just can't think like that. And yeah, I mean, I'm honestly, if I didn't lose from this stock now, I wouldn't have learned the lessons and I would have lost down the line. So I mean, I'm happy to take the loss and then the lessons, because I wouldn't be right here right now evaluating what I did right and wrong. So CTRM, I'll never forget this lesson, and it's the same kind of thing, like not as much volume, maybe 1 million or so on this one, but it's more that it just popped up out of nowhere and it's got range. With UAVS, it was more, I misread the key level, so that's something important, but more important, because I've made the mistake a lot, if anything trades 3 million and anything over 1 million in the opening candle, you need to be probably looking to get out at dips, and that's the main lesson here. Okay, these two stocks are a little bit weird because it's about like forming a new plan. So this is like learning to short without a key level on the daily, because Y10, it's got a history of failing, runs once and fails. And then Y10 was interesting on this day because you could play it long and play it short on the 27th of April. And it was a really nice, safe long on an intraday break, because you had this key level of 8 before it tried to push again. I was actually short in the morning because the volume wasn't that high, but again, when the key volume came in, it was quite heavy. I mean, it ultimately traded 30 million when it barely ever trades normally. But what I was really interested in, I mean, this was a nice long. When it popped up here and came back down, I saw a similar long on, I can't remember the ticker, but I've noticed this as a pattern. If it breaks out earlier, like 10:30, it'll probably be setting up for a breakout later in the day. So when you get this kind of these higher lows around the 11s, and then it's setting up for a breakout around 12. I remember I was buying in the 740s, 750s. I took it up to 840. Popped up, breakout held. It's not too bad a buy here. You've got to expect that it'll come up over and it'll come down under, then it'll try again in the afternoon. I've seen it several times. And or even buying on the breakout, risking the 740s, buying on the 8s. And these will work more times than they won't. And we got this rip up all the way to the 980s. I was selling in the 840s. I was selling into this initial push. But what I'm more interested in is this like 2 p.m. fade, because this is a good breakout, but ultimately it's not a good chart, and it's never going to run for multiple days. So there's going to come a point in the afternoon where it's going to start to break down. So I'm really interested in watching for some sort of trend break in the afternoon on a stock that's not likely going to run multiple days, but is up a lot due to the volume. So I will be taking some shots in around the ones. Maybe I'll wait for the cracks, and maybe I'll wait for the pattern to break, and I'll get this kind of bounce here at 150. And I'll be with a view of like starting. I don't have the right broker to swing. I'll be moving to a broker to swing shortly, but I'm at least going to start watching for these and just playing this little move from like the 940s down to the 7s. That's a good 20%, 18% move. And then once you start swinging multiple days, you're getting from the 9s, the 6s to the 9s. There's huge money on that. And with PSTI, it's all about managing risk and managing a plan. I was short for this breakdown on this day or this day. We'll check. Yeah, it was on the 27th of April. So that was 29, 28. Sorry, it was this. Again, I mean, if I had a broker where I could swing stocks, I was short. When the breakout was kind of failing and it was falling through this 1250 level, could have took this down to the 9s as well. I mean, I might have took it down to the 10s. I wouldn't have took it down to the 9s. But I was looking at this 1250 level. We've got this kind of choppy failed break, and then it struggled all day. And I thought, if this falls through this level in the 1240s, it's not going to get back through. So we had the push, couldn't make it. It slammed back down. I shorted the bounce in the 1215s, and it doesn't look like much here, but it was trading a bit weirdly. Like the candles are chopping up and down 20, 30 cents. And I just didn't stick to me planning the risk. So like I was short from the 1215s. I should have given it under and over the 1250s. I didn't. And then like I covered at this double top thinking, oh, just fuck it. Do you know what I mean? Like I was like, oh, fuck it. I'm like $100 down. And I should have honestly just waited till my risk was broke, not got out of the stock. Because ultimately we got the drop down to the 10s. So that's like a 20% move I could have made. And my risk was never broken. And then obviously if you hold that, you've got another crack down to the 8s. So my risk was never broke, but I just got out anyway, and it was really silly. So SAEX was the 2.4K trade, or it might have been like 2.2, and I made a couple of hundred on something else. But the key lesson on this one is an old one, and that's why it's the biggest win, because I've seen this pattern so many times and I know the rules. But its history doesn't repeat, but it rhymes. History does not repeat itself, but it rhymes. I'll say it twice because it's very important. And what I mean by that is a stock will run a certain percentage or gap up and fail a certain percentage in relation to its volume, because the volume will rhyme. So when this stock back on the 19th of November traded 11 million volume and got from the 160s to the 450s, it was up like 300% on about 12 million. So then when I saw it gap up from the 115s to the 3s, it's like it's up 270%. The relation pre-market looked similar to the volume here. So I thought this, based on the volume, it could go a little bit higher, but we've also recently had this downtrending chart and a massive fail just a little while ago. So I thought this will probably do the same. You'll get nearly a 300% move. We got from 99 cents to $3.50. So we got a 350% move here. We got a 150 to 450, 153. So we got an exactly 300% move. We got more than a 300% move here, right? From if you really look, from the 115s to the 350s, we got more than a 300% move, but we got slightly more volume. So I was looking for it to top around 300% based on the volume. So when it did hit around the 280% level and it started to kind of fail here, I started in short, covering dips, short and pops. And then when we had this consolidation, I was patient, shorted a bit more in the 318s. And then I was a little bit over aggressive because I kind of had a little bit left to short in pre-market, but it was kind of like holding me breath that because it would fail, I mean, basically I had to cut it if it broke high of day. But what I would like to have done is had a little bit more 350, 360 to short, and then like let it fail out and then get out at like 370 if it really broke and held the high of day. So it's a little bit aggressive, but taking into account it failed here,
once it gapped up. So I mean, let's just look at the times it gapped up. So it kind of gapped here. That's one gap and fail. That's two gaps and fails. That's three gap and fail. That's four gap and fail. This doesn't count because it just ran from nothing. It didn't gap. That's not a gap and fail. That's this first red day. So that's four gap and fails. That didn't gap. 5 gap and fails. 6 gap and fails. 7 out of 7 gap and fails. Here it kind of ran a little bit. So that's 7 against 1. That didn't really do either. That's 8 gap and fails to 1 gap and goal. 9 gap and fails. And this was the 10th gap and fail. So it was pretty much 10 times out of 11, it will never run, ever. And considering it just gap and failed here, and it was already up 300%, the likelihood was it's going to... So I had basically like an 8% chance of failure, 9% chance of failure. And I went in heavy, near the risk, and it came down and I just covered into the dips and took the 2.4k.
Thank you so much for watching. I think I forgot to say the link to Sam as well, the coaches. If you want to check him out, it's below in the description as well. But more importantly, the last person I want to thank is you guys, because it's took relentless determination to get here, and everyone's saying I could never do it, and a lot of people are saying I could do it, but I need to thank everyone who's hated or followed, mostly the ones who've shown love and positive energy towards me. You are the ones that I felt like I couldn't let down. Maybe I could let myself down. I couldn't let myself down, to be honest. But I couldn't let myself down, but I didn't want to let you guys down, because I was on a mission to prove that anyone from average intelligence, average background, like where I come from, they're all working labourers and construction sites and stuff like that. And not a private school education or anything like that. I wanted to prove that an average person could do extraordinary things. And although I haven't yet, I feel like we've certainly come out of almost like the dark room of study. We're entering some of the light, and I'm feeling some of the warmth of the sun, of the rays of the gods, of the trading gods, saying, Stephen, yes, you're nearly there. You are blessed, come through. And I'm looking forward to keep on stepping into that light with more relentless hard work, study, determination, and good habits. So thank you.